Good evening, everyone. We are live. It's about 9:57 here, Central Standard Time in the Midwest, here in Chicago. I won't be going long tonight, just because I'm only recapping one trade that I took today. So it's a good thing. Make it short and sweet. Good evening, everyone. Don't want to, keep you guys too long, but as well, this is for archival purposes because I anticipate people, watching the feed later. Once it's saved, then you guys can go back and check this out. And in the future, once I do build the following and, a community, you guys will want to know where I began, how I got where I am, just things of that nature. So let's jump right into it. Let's see. Trade I placed today was on a company by the name of Aspire Biopharma Holdings. Let's play the video first. All right. So this trade I opened at about 8:45, 8:30, 8:45 in that time around. Closed it a little bit after 9 o'clock, 9 a.m. This company had some news about a new aspirin that they basically released, or some stuff in regards to that. With that being said, the stock went up from like 36 cents from yesterday to about as high as 87 cents at one point in time. I actually closed my trade in this top of this candle at 83 cents. So, as I tell you guys all the time, when I look for stocks, I look for stocks that are, one, has some type of news catalyst that gives reasoning to why the move is occurring. Without news, we don't believe that the actual stock will hold that momentum and that position may at some point pull back. We don't want to get caught up in a pump and dump scenario for the most part. It's really what we're trying to find some type of confidence behind. Two, I want something with a low float. So this company has about 39 million shares. It's kind of up there. Not my bread and butter. I look for stock with about less than 20 million shares, but 39 million wasn't too bad, considering that they traded 467 million of them. So 467 million shares were bought and sold today, were traded, and there was 40 million basically that they actually had available to buy and sell. So I tell you guys all the time, based on the float size and the volume, that will allow for a volatile move such as what you've seen here, for a stock to go from 36 cents up to 87 cents. 50-cent move, which is almost a 200% move in essence. You need that float size of a company to be low in order to get that type of movement. If it's a company like we saw Friday with about 147 million shares, it'll be hard for the the price to hit that 100% pentacle that you guys want to look for. Two, outside of sheer float size and volume, we want to look for, and also news, we want to also look for the leading gappers for the day. So if you rank the top 5 to 6, 7 stocks that have the largest moves in the day, those moves will allow you to basically be able to take a few percent off the table. Typical stocks move 1 to 3% in a day, but when you find things moving over 30% to 50, 70, 90, 100 plus percent, it's easy to get in and take 2 or 3% on a one candle swing. That's because each candle is going to move about 7, 8, 9, 10%. Like I tell you guys every day, you just want to take a cup, stick it in a fountain, pull out a cup full of gold coins. That's all we're trying to get here. My phone is broken. I changed the battery. It was an aftermarket battery, so the phone is not registering the battery. So the phone literally would cut off every 2 to 3 minutes and cut back on its own. So my recap won't be able to show the beginning and the end of a trade because I literally have to screen record for about a minute or two and end the screen record as I'm in the trade, which is also sucks for me being stuck in a trade that I can't immediately get out of at the exact moment in time that I want to get in and out. But what can we do? I got another battery coming and I also have another phone coming, so it's all about which comes first. Does the new phone arrive before the new battery, or does the new battery arrive before the new phone? So we will see if they can get it here, who will be the person that I'll rely on for the update later this week. But with that being said, I got in this position at 55 cents. So I literally got in back here in one of these candles. So this is about 8:44. Like I said, I got in way back here somewhere. Somehow I got a cost basis of 55 cents and rode it up. Literally rode it up to this 83 cents. Once I get in a position, I'm getting in a position because I'm anticipating it breaking that pre-market high. I tell you guys this every day. This orange area is pre-market. This is in between the hours of 4 a.m. to 8:29 a.m. This white area is when the market is actually open, when it's live trading for everybody. So I want to either get in something that's already broke above pre-market highs, or that shows some type of positive momentum that it will look to break pre-market highs. When the trade goes above pre-market highs, that's important because that shows that the news is still piquing interest of investors. Because news, like I said, comes out during pre-market hours while we're asleep. We'll wake up and the stock will already be up 70, 80%. People wake up 4 in the morning and they trade live solely during pre-market hours because, one, everybody can't trade pre-market. So it's easier to get a specific momentum towards a one side of the playing field because you won't get all bodies included to be able to fight for the bulls and the bears. So if something's moving in a positive momentum, it's going to potentially stay in that momentum until the market opens. And then when everybody else who can trade sees the profits that they are currently sitting in because they are already holding shares of the specific security, that's when they will wake up and look to take their profits. And then you'll see a stock kind of pull back. And as well, pre-market traders are anticipating those pullbacks as well. So they'll wait until the market opens live, see if it spikes for a second because people that couldn't get in are now fearing missing out and potentially helping to push the actual stock up even higher. My phone just cut out again. Push the stock up even more, and then as soon as they get their little pop, that's when they'll take their proceeds. But for us, we're looking for this stock to break this green line that I put here, which is pre-market highs. Once it broke that, it was game time. Now, the stock could have continued pushing higher, but when you're trading a stock that is less than $1 per share, that $1 area is really considered resistance because price hasn't broken into that level. Stocks like to really fight at whole dollar amounts and half dollar amounts and quarter dollar amounts. So 25, 50, 75, $1. When a stock reaches those prices at points in time, you will run into a collective party of people that are waiting to get out at those numbers. So when the stock got close to $1, that's when you saw that pushback. For us getting in where we got in at, we were looking at the RSI levels down here starting to turn around, as well as the MACD starting to turn around. I tell you all the time, when it's pink, the bulls are taking over. Once it started to gain momentum going pink and it reclaimed its 50 EMA, then you started seeing it actually push up even more. But as well here, we saw this higher low. So you got a low, then you get a high, then you get a higher low, which is what that was. Once we saw the price go up, bounce, pull back, and then bounce off of there again, and then start making a higher high, we just literally rode this wave. This 1, 2, 3, 4, 5, 6, 7 candles to this 8th candle. Once we watched the RSI become oversold, overbought up in this area up here, we knew it was time to let it go. When the RSI becomes above 70, this is really no man's zone. You don't really want to buy stock when it's up here in this area because pressure on the downside is going to pull it back. You don't know how far back it's going to go, but price has this thing we call mean aversion. Price likes to be at the average price. This pink line is the mean, which is the average price of the last 50 candlesticks. So if I add up 50 of these previous candles and divide them by 50, that's what this pink line is going to be. Price for traders, we consider price as being the best price to get in at, other than a discount. So when it's below average, it's a discount, which is great because we know price will eventually try to pull back to that average. But if you can buy anything, you want to buy at the average because that's your best chance of a 50-50 momentum, either up or down. Whether the price goes to a premium or it goes to a discount. My phone cut out again. This shit gonna happen every 2-3 minutes. But with that being said, this price had drove, they had a rally. We call those runs. They had a run so fucking high that it was so far away from this moving average. It needed to cool down. As well, we saw here the RSI was overbought. So as that became overbought, that's when people started hitting the sell button. Sell, get me out, take my proceeds, take my profits. And you saw the sell-off start to occur. As well as you're looking at the candlesticks, you start seeing them get larger. You start seeing the tails get a little larger. You see the body of this candle get larger. Then it starts getting smaller right here. You start getting these little dragonflies, whatever you guys want to call them. You start getting these small size candles. This is where you look and you start paying attention that momentum is literally dying out. We're seeing a trend exhaustion is what we call that. At this point, these are all visual representations of what the market is trying to show you. When you see that, that's where either we call that indecision. You're at a moment of indecision. Is the price going to continue pulling up, or are they going to pull back? At this point in time, when you start seeing this larger wick at the top of this candlestick, as price shot up to 87 cents and they shot it back down, this was giving you more indication as well that we were at an exhaustion point. At that point, you start seeing my MACD. It's growing, and then it starts slowing down. As the MACD starts slowing down, you start seeing it literally getting smaller from here on. You start seeing it pull back. And this is because the bears are taking over. The bears are the sellers. The short sellers are stepping in. They're stepping up to the plate. They're pushing the price back, as well as profit is now being taken. And that was it. A short and sweet little move. There was other things out there to trade, but I was busy at work. But at the same time, this one trade off of a $300 position, I took 100, so that was like 33%. With that being said, you don't want to overtrade. When you get a golden trade, when you get something that goes your favor, I could have put a $3,000 position in. I could have bought 10 times the size. I could have bought 5,000 shares and made $1,000 on that same $3,000 position. You don't necessarily want to put too much skin in the game, because just as quick as it popped up, it can pull back. As you see the body size of this red candle here, this was already shown though as you started seeing this chart pattern start to formulate. When you start seeing these candlesticks get smaller and it start pulling back and start pulling back, they're fighting. Price is trapped. But now you see, as this chart pattern forms right here, this little flag, they lost momentum and the bears started taking over. But as well, you are aware that, as I said, price wants to come back to this average. So when it came back down here, you saw it bounce off this average area. It's what you watched the price do for some time before it eventually lost that average. But throughout the day, it eventually tried to pull back to that average. Again, they rejected at that average. It's trading sideways, going down on the downtrend, and fell back to 56 cents. Tried to pop back to that average again at some point. So, once again, let's recap. Just show the trade one more time. Do any extra analysis that I may visualize during the actual replaying of the video. But all in all, that's really it. That's really what that position was about, and it's in essence. Let's play it again. I had somebody DM me earlier that was asking me to explain this video that I posted. So what you're looking at here, for those that don't understand, this represents my 505 shares that I had. This blue line is the price that my cost basis is. So I'm sitting at 65 cents. I said 55, so I'm at 65 cents. So I'm sitting at 65 cents. I bought it down here at this area. I bought a little bit down back here somewhere. Price shot all the way up here with this dashed line to 79 cents. Then it went up to like 83, 84, which was literally this first candlestick right here that you're seeing. So this one right here. So this is the first one that you're watching. Then you're watching this one pop up. This is the one that I got out at right here at this wick. I just drew the pre-market line right there, that green line that you guys see. So that was basically that trade in a nutshell. This was one of the top leading gappers this morning. They had good news about the aspirin product, that they were, not that they released the product, but they had some data on that product and that it was good results. So in the pharmaceutical industry, that's what we look for. Some type of trial data, some type of product data, that's showing that this is a good product. It may potentially end up on the shelves. It may end up potentially being prescribed to patients. So that's a revenue earning stream for this company down the line. People ask about investing. When you invest in a company, you want to invest in a company that's showing growth. You want some type of catalyst that will show that their earnings and their revenue is going to increase greater than what they received in the past. As long as they have some track record that's still increasing in terms of their revenue stream getting larger. So last year they made 3% revenue. This year they topped that and made 4%. That's still a growing company. You'll get more people interested in investing in that company because they are still growing. When you start seeing a company report earnings and the earnings are below what they previously reported, that's when you start seeing investors start pulling their funds, because now this company has matured and they are entering into a phase where they may start potentially falling behind in sales. They may not meet expectations next quarter. The product may be losing its value in the marketplace. There may be a new competition that stepped up to the ballpark and they're taking market share from these individuals. So that's why every quarter you will hear a company give a forecast into the next quarter and into the next year of what they believe that their business cycle is going to look like, because they're trying to attract investors because they want them to believe that the company is still growing, the company isn't stagnant, and that it hasn't seen its greatest days yet. And that's really what you want to hear when you hear something about a new product being trial ran, something just getting ready to come to the market. There's been a new breakthrough in some type of strategy that they've been working on, or they've changing up the business model, and the business model is expected to earn X amount of extra revenue percentage for the company. This is what you look for when you want to find a company to invest in. So people talk about Tesla all the time, and how when they finally get their robo-taxi model up and running, how much more Tesla is going to be worth. But that's why the conversation exists, because they keep speaking on this new product that they want to bring to the marketplace. They're trying to help pioneer that space. In essence, there are other competitors out there in the electric vehicle sector that have autonomous vehicles and that are actually already doing trial runs and pilots in that robo-taxi space. Tesla's done some pilots out there and stuff like that, but they still haven't brought it to the masses. And this is another reason why when you talk of like the electric vehicle sector, America is trying so hard to keep the Asian market out of it, because the Chinese, they basically dominate it. Their electric vehicles, they're way above and ahead of the curve when it comes to electric vehicles. They have different vehicles that we'll never know the names of because they'll never be marketed here. So you go across seas, you see all these other emblems on these cars. You're like, what the hell is that? That car is nice looking, looks affordable. It looks luxurious, but it's affordable. But we can't bring it here. Same thing with over there. We can't bring our products over there. They'll sneak them in and things of that nature. But politics are politics. So that's what it is. So once again, I got in at 65 cents, so it was about this range up in here somewhere. I bought in. Price eventually started to climb once I started seeing this MACD get ready to go back green. They climbed above the 50 EMA, and I just rode this run. Got out once I saw the first sign of resistance, once I saw the price pop and pull back. This one here would have been a potential moment of resistance that was shown, but the size of this candlestick was so much larger than this body of this wick well, the body of this candlestick was so much larger than this wick that the momentum as well, when you look at these volume candles down here, the histograms, there was so much volume there that it helped me believe that there was still some momentum going to the upside as the traders that were trapped in this candlestick tried to reclaim it, which exactly they did. As you see, the size of this body to this wick, it's identical. So the people that lost money from this pullback, they just regained it and reclaimed it. They pushed the price back up, but they couldn't do it again once they saw these other two wicks. And then eventually you saw how smaller in size the body of this candlestick was compared to all these other previous extended bodies. So I wish I had made more trades today to, go over for you guys. I can show you some other things though. Let's see, SNGX. They had 184 million shares that were traded. They have a float size of about 3 million shares, so this is a great position to actually pay attention to earlier as well. They had a moment where they popped above pre-market levels. Let's see, pre-market. So this is pre-market right here. I'll pull this up a little bit. Up to this $4.40. So this was something that I wanted to pay attention to earlier, but literally missed the move. This one candlestick popped from $4 all the way up to $4.60. At that point, that pushed up above pre-market levels and rolled up a couple extra candles before they pulled back below pre-market levels. But if we look at it, same thing would have been in play. Would have caught it as the MACD went from pink to green, so it got in somewhere down here because they gave some type of belief and assumption that the price was going to test those pre-market levels. We saw higher highs and higher lows. So this was a low, then this is a high, this is a higher low. This right here traded sideways. It started a chart pattern to form. Eventually it broke out, pushed a higher high, pushed a higher low, then eventually popped. And it rode this trend up the whole way until it popped and then broke above pre-market levels. As well as you watch the MACD, it was green and it just popped. But you knew as well to get out because the price was overbought. So many shares were bought in a short amount of time, within 60 seconds. This one candlestick, they bought 2.66 million shares. Company only has 3.26 million shares. They bought 66% of the shares just about in one candle. That fast. Price pulled back, tested pre-market highs, bounced off, shot up even higher. So this was something as well that you guys could play once a trade actually first breaks above pre-market highs. Wait for it to pull back and test those pre-market highs. And once it shows there's some support there, you can get in and ride it up for whatever they give you and take it. You look here on this pullback, you see that you got this large red candle. Then the next candle beside that one is small. How small it is basically showing that it's losing that downside momentum, which actually was a green candlestick. And then right after that, you started seeing it push back up and take back off and make a higher high. But then you started seeing that this candlestick here, this is in a tight range, but even still the size of it shows that it's losing momentum. And then the next candlestick, it couldn't break out, same almost identical size, but then it lost that little range that it was trading in and pulled back. And you start seeing the MACD start going light green, and price eventually wants to come back to the moving average. So far above the moving average, this 50 EMA, that at some point in time, price wants to come back here, which eventually it did. They had news as well. Let's see what it was. I don't remember exactly what it was. Let's see. They got an FDA orphan designation in some type of therapy or treatment that they basically was reporting. So this was great news. This stock pumped up over 100% at some point in time as well. But based on that news, like I said, you want something with a catalyst. If it has good news, then the momentum and the interest is going to be there. You want to get in, make sure you get in on the front side of that move. You don't want to get in too late, because then when something's overbought, you're just going to end up on the downside as profit is being taken. And that's what happens to a lot of traders who find out about things late in the day. So you need to actually get to the game early and try to see what is moving. Do your due diligence, see if there's news report, giving supportive reasoning to why a move is moving, and wait for the best opening to get in. That's it. VTAC was another one. This company had some good news. It popped up from $2.65 to one point touching $5.28. That's 130% runner at some point in time. But this is all pre-market levels. So pre-market went as high as 528, but during the day, it only went as high as 425. It couldn't get back up there, 460 or something like that. It's the highest. It popped it. Well, now it's like 430-ish. Yeah, 427, 430 was the high. So this had pulled back so far from the pre-market high that it was going to take so much more momentum and volume to get it back up there. So this was another reason why I wouldn't have traded this. But the news alone, if you would have got in when the news was basically first reported, it would have been a great move to get something from $2.66 up to $5.28. So those were the top three that I was paying attention to. Each of them at some point in time went up over 100%. This traded 59 million shares, almost 60 million. And they have a float size that's not showing there. Let's see if I can get the float size real fast before I conclude this stream. VTAC, hold on. They have 2.59 million shares. So 2.59 million, they sold almost 60 million of them today. Good relative volume is what we call that. Relative volume is just the volume today in comparison to the average volume. So average volume, they only trade 2 million shares in the last 30 days on average per day. They sold 60 million today. If you want to make a watch list, that's something you look at. What is trading in volume greater than what it averagely trades at? Once you get that, then you find out, is there news supporting why there's so much more volume in this move for the day? That's really what we look for every day when we look at the news for a stock, the volume in the stock, the average volume for the stock, and the amount of outstanding shares for that stock. Then it's all about when and where did you get in. Did you get in on the front side or the back side of that move? You don't want to be late to the party, like I said. But one last video recap, and then we're just going to close this out for today. So that was the recap for today. Tomorrow I will be at work. I'll be at work at 5 a.m. Get off at 5 p.m. But throughout the day I will make my moves, make my trades, recap them later in the day, in the evening for you guys, just to give a quick fundamental analysis of it, technical breakdown as well. The fundamental analysis would be looking at the revenue stream of a company, what their product is, what sector they're in, just the profile of the company, what their competition is doing. We don't get into none of that. We don't care because we're not looking to invest in these companies. These are all short-term moves that we make. We get in and we get out. The technical analysis is what we come here every day to look at. That's the charts. What was on the chart that showed why we make these trades? When you trade, you don't want to overtrade. So don't take what you guys saw me do Friday, 9 trades in a day. And I just took those trades just because we were live at that point in time. Just wanted to entertain, just look for something to get in, make a move, get out of it, close it, go on. A downside of having so much capital to spend is it will make you overtrade because you won't consume all of your funds in a day. That's okay. I got a few grand in this account. I only used $300. $300. Nowhere near what this account is capable of. Every day I don't look to make $1,000 trade, a $2, $3, $4, $5,000 trade. I made a trade Friday on accident where I tried to buy 25 shares and accidentally bought 255 shares. And it was a $5 per share position. That was like shit. Almost $1,200 on that one position. Not my characteristics at all. Closed that trade for like a $70 loss just because I didn't want that type of exposure. The next trade after that, I opened another trade that was like $2.60 some cent a share, and I bought maybe 200 shares, 100 or some shares. And that trade, I made like $100 on it. So you see just what you can do with a little without risking a lot. That's really what you want to pay attention to. Don't blow up an account trying to prove a point, trying to be greedy, trying to, take a home run swing at bat, because it's not worth it. You don't want to get in and find out that you were late to the party and now you're trying to make back a $300, $400, $500, $600, $700 loss in the span of the next week, 2 weeks, 24 hours, whatever you're capable of doing. As well, I don't trade options. Stay away from options. I show you every day just the proceeds and the profit that you can make off just trading shares alone. People want to get into the options market because they see the probabilities of what they could actually bring home profits wise off using a few dollars. I'm doing the same thing. If I open an option position, I'd probably spend $500, $600 to make the same $100, $200. And I would have way more risk with an option because an option contract expires. One, you're fighting against theta, which is the time variable, which makes it expire. You're fighting against the actual gamma that actually pulls away from the delta. You're fighting against the vega, which is based on the volatility of the price moving up and down, which takes away from the delta and the premium as well. There's been countless times where you will see the price of an actual stock go back to the same price that you first opened your option purchase at. But the price of your premium won't be back to the same price that you originally opened that position. And that's because of those things, because you're fighting against the gammas and the vegas that are impacting the delta negatively every time the price goes against your position. We can have a course on options if you guys want at some point in time, but I literally remove options from my trading accounts to keep me from even being able and capable of getting in a move because some news came out based on the economy, the president, the Federal Reserve, a sector breakthrough, something, anything that would make a stock move a certain direction in whatever favor I wanted it up or down, and then I would buy a call or a put option. No, we're not going to do that. Stay away from that. Just buy the shares. You have all the time in the world to recoup those losses if you have to hold that position. But at the same time, you don't want to get caught in a trade with an option contract. So, with that being said, we can go over risk management sometime later, whatever the case may be. If I end up showing a losing trade, I haven't had a losing trade in weeks, but that's just because I focus on my consistency and my accuracy. That's really what you want to do as a trader. How do I get a position that I have a good 60-75% confidence behind that position? I still haven't grown the confidence in a position where I can just open one position and buy 3,000-4,000 shares. And I am consistent with these profits, but I still haven't given myself enough swings at bat to get comfortable with that. And that's what you want to do as you build your confidence levels. Then you start picking up your positioning sizes.